Alrighty, good morning everyone on YouTube as well. I hope you are doing good. Live here in the BB community. Let me do a quick little adjustment here for the YouTube. There we go. Alrighty, looks good. Okay. Alrighty, everyone. As always, do keep in mind that this is purely analytics overall. You make your own trade decisions when you're working with things. Past form is not indicative of future results, and nothing that I say or mention or look at or anything like that is investment advice of any sort. With that being said, and the initial housekeeping out of the way, we do have a couple of things coming up as far as econ throughout the world. So let's go ahead and open that up and get a look at the calendar for today. Now, do keep in mind that we did have a couple of import-export numbers come out earlier on things. Numbers not too bad. We can see here that we have crude oil coming out at 10:30 as well, and then after that, Fed, and then bill auction. So our main reactionary thing for the morning trade of the market is going to be the EIA report on there. So do keep an eye on that. And keeping an eye here. Oh yeah, by the way, if you want to post things, I'm keeping an eye on the main chat. So if you post things there, that's where I will see them. Alrighty, so keeping a close eye here, 10:30 for that report. So general market overview. What do we have for the NQ? I'll do ES, NQ, and SPY for the overview. People on the YouTube there, you'll get the initial briefing. But if you want to see the trade action and how we're working with a live market, you have to check out the description and come over to the community. Alrighty, so looking here on the NQ, looking at the daily time frame here, we can see flag scenarios setting up here. We've had our initial downtrend, moving back up, and now we're right here at these all-time highs. Go ahead and call it a 17,800 region here. We want to see that break and continue up. What would that look like? Well, we've got two scenarios here that we want to keep an eye on. Go ahead and get our drawing tool. There we go. So now, when you go back and look at it statistically, if we are beyond the 3/4 mark right in here of a flag, if we get to this area in here, there's a high probability we're going to fail out. That target ends up being your low in there. Most flags, when we see them to actually form the flag bottom here, this last bottom that they end up flagging there, that tends to be a great target zone, and then you can have continuation of the downtrend. Now, if we have an uptrend on this, we always want to utilize the 60% measure. What is the 60% measure for this? When you use your Fib projection, your Fibonacci projection here, you set a 0 here and 60% up on that move. So whatever the width of your flag is in here, that 60% move up tends to be the where we tend to stop within that price action. Again, if you want to see those finer details, hey buddy, if you want to see those finer details, then make sure you come over to the community. So right now, though, with what we're seeing in the world, we do have a decent amount of news, a decent amount of participation in the market, and we should start to actually suspect some bullishness barring any type of oddities to hit the market. Now, what do I mean by that? Recently, within the oil field of things, there has been an adoption by the SEC that anyone that is dealing in certain speculative futures and has a registration as a hedge fund or stuff like that is actually now going to have to register under broker-dealer. This is very interesting because your commodity pools, other things like that, they were just another business, so to say. They were not under the regulation of a broker-dealer, which is much more stringent regulation. And I've asked a couple of industry professionals, both on the trading side and the people within the oil markets that are dealing with the physicals and the molecule on the gas side. And even they were a little bit like, yeah, we're surprised it took this long, and we're not really surprised that it happened. What it primarily has to deal with is that usually as places are ramping up for bigger moves. So if you're going to have humanitarian aid, you're going to have conflict, you're going to have things like that, you have to have stabilized prices within a market to be able to do that, i.e. less speculators in it. The idea behind this is that there are so many registered pooled entities that are able to Wild West it within the markets, and now they're wanting to bring that under control. So they're expecting to actually see a drop off from funds, from entities that are registered as investment entities that do not want to go through the BD process, because trust me, that is a whole lot of hoopla on there. But it is something that a lot of people want to avoid, and there will be firms that close down from it. So for a while there in the markets, we may start to see a little bit of teetering away of volume from the oil markets. Not a lot, because granted, oil is still a global thing, but it's something to definitely keep in mind, and we're going to see it impacting things like the NASI and the ES and the SPY. So bring ourselves down to the 1 hour time frame. We take a look here. We look back at our London session to see our highs and lows. We can see nice movement right through here in the pre-market. Bada boom. Nice little trailing up. So Asian London channel in there. So if price rejects this area up here, we look for price up, sweep these highs, bring its way back down through manipulation to sweep those lows, and then get a press up. Creed, how would we be seeing a 300-point move within here? Actually, not big of a move, and you got to keep in mind that we had a nice little morning session. So for us to come and sweep that area and then push up, also a possibility on this, because we have what? The oil report coming out at 10:30. So you're going to see an initial balancing of orders right there at the bell, and then we will see our trending move for the market on this. So that is what I'm expecting on this. Now we'll clean things up on a tighter time frame. Let me hop over to ES here real quick so that you guys and gals on YouTube can get a quick overview of that. Break ourselves up to the daily. There we go. Oops. Okay. Bring ourselves over. Nice little price action push. Nice trending fork. I like what I'm seeing. And then you have a central oscillation point. That can actually get moved to right there. So this is what's known as an Andrews pitchfork on this. Now, Andrews pitchfork is traded, just think of it in an angular channel. That is exactly what it is. It's an angular channel. And right now we're seeing a nice little push up. So what we can expect on this is, in essence, almost a ping pong effect. So I'm not expecting a huge move up or a huge move down. What I'm expecting is oscillation within this to work within that channel until we get a macro event that pushes us through. Right now for this week, we do not have any macro events to really push us out of this channel, and we can expect to see a nice little walking along this trend. So again, you want to keep an eye on that 50% area right in here where your price oscillation has occurred. And then until we get a good reason for a hard acceleration up or out, which right now we just do not have it. We do not, let me phrase that, we do not have anything on the books to force a hot oscillation. You'll notice that the range of this channel is actually within natural ATRs. So that allows us a movement to come up, feather a little bit, and then walk our way back in, vice versa. But we're still in upward momentum. So I am expecting further upward momentum for the ES here as we continue to work our way on that. And we bring ourselves down to an hourly, so you can see the intraday action. We can see here, intraday action. Open this up. Pretty standard channel right through there. So you have your upper levels marked. Come over to our channel. Have our highs right in here. This is our buy side liquidity. And again, it's called buy side liquidity because the shorts that are in the market, that is how they close their orders. Your liquidity zone is primarily defined as closing orders, not opening orders. So you get acceleration from opening orders. All right. Nice move right in here. Nice 3-bar up. Technically that overlapped, but this would be considered a gap right in here. So do keep an eye on that. We had slight overlap in this. What I would like to see for today's price action, a little bit of acceleration just to get above these highs here, sweeps that liquidity, comes back to test this area, and then pushes higher. So I am leaning bullish on the day, but that does not mean that we will not change at some point in time. So do keep that in mind. But I am leaning bullish on the day, barring third-party actor, i.e. the oil report, to drive us. All right, YouTube, I hope you enjoyed that quick little analysis on the market there. Do keep in mind you get further analysis, broader analysis, and even the answering of your questions when you're where? You're over in the BB community. So make sure to check that out, and to description below, all the links and information there. And come hang out with us in the BB community where we're talking about stocks, trading, and just the markets in general all day long. So thank you, YouTube.